Welcome to Bloomberg Technology. I'm Emily Chang, currently sheltering in place in San Francisco. Stocks fall as concerns about a global recession mount. The number of coronavirus cases around the world now surging past 2 million. New York Governor Andrew Cuomo has now advised residents of the state to wear face masks while in public, while governors continue to discuss with the president plans for how and when to reopen the economy. We're standing by now for the daily White House briefing that's scheduled to start at the bottom of the hour. We will be monitoring that for any headlines as they come. Meantime, shares of the biggest banks, Citigroup and Bank of America, plunging today after disappointing earnings results, revealing just how hard the pandemic is hitting them. Goldman's shares ended the day up, but their portfolio took a big hit. Joining us now, Bloomberg's Sonali Basak, who covers the banks for us. Sonali, walk us through these big loan losses and why did banks do so poorly today?
Those loan losses are the number one reason we're seeing issues at the big banks. But guess what? This might get worse in the coming quarters, and that uncertainty is really what's making investors nervous. When you go to Bank of America, they expect, they're considering what a recession would look like well into 2021. And so now you're drawing out timeframes that go well past the initial couple months that people expect the economy to be closed for. The banks are factoring in the reality that the American consumer, with unemployment rising, will just not be able to spend as much, and that there will be bad loans as people are not able to necessarily pay back all their loans.
Meantime, Sonali, we're just getting new headlines crossing the Bloomberg. Google's CEO outlining plans to slow hiring in a memo to staff for the rest of the year. This coming from Google CEO Sundar Pichai. You think about all of these folks who aren't going to get new jobs, who are possibly going to lose their jobs. What are the banks doing in light of a weaker U.S. consumer, and are they doing enough?
And what's amazing, Emily, is you were talking about Google. That's a large, healthy company. There are thousands, millions of companies across America, smaller companies that do not have as much access to loans. Right now, you look at the U.S. Payroll Protection Program, $349 billion that's running at capacity right now. The banks are doing what they can right now to get those loans out faster. But what happens 3, 4, 6 months from now as this continues to drag on and non-performing loans get higher? There will be less of a willingness to take on losses. And that is not true for every company that they have such great access as Google does to those capital markets.
So talk to us about what happened in Goldman's portfolio. We know that the portfolio itself took a hit. The stock ended up because trading surpassed expectations. What happened there?
So listen, when it comes to Bank of America, Wells Fargo, JP Morgan, they have huge exposure to the consumer. But Goldman Sachs has much less exposure to the consumer, and trading was really skyrocketing among very high volumes. Their electronic trading platforms really showed up. Their ability to create markets and liquidity in this kind of market really showed up. And they're just less exposed to the consumer. It's kind of as simple as that. What's more is that when you have Goldman Sachs and then Morgan Stanley reporting tomorrow, the investment bankers are really showing an ability to show up and find ways to do deals in a tough market. So that's finding ways for their corporate clients to get liquidity. That's finding creative financings for the likes of Twitter and Silver Lake, for example, or Airbnb like you saw last night. And so deals are still happening. It's just not necessarily the types of deals that you would think.
All right, Bloomberg's Sonali Basak, thank you so much for that update. Again, that headline, Google to slow hiring for the rest of the year. This according to Alphabet CEO Sundar Pichai. He has outlined these plans in a memo to the company. We'll continue to monitor those headlines as they come in. Meantime, the U.S. Justice Department is continuing to track disinformation campaigns being waged against the United States by state actors to sow discord about the coronavirus. I talked about just how American adversaries are trying to take advantage of this pandemic with IronNet's Vice President of Strategy, Jamil Jaffer.
There's a number of things, Emily, that we're seeing in this environment. One, and sort of the most obvious, is we're seeing overt messaging from our enemies. Folks like the folks in China, folks in Russia, Iran, saying this is a U.S. virus, right? It's coming from the United States. It was a bioengineered weapon, the like. Sort of stuff that we know isn't true, but we see that kind of messaging. part of what we see going on there is an attempt by them to distract their own population from the very real challenges they have in their countries, but also an opportunity as they see the U.S. focused inward to take advantage of that situation and maybe moves overseas. So you see Iran also getting more aggressive in a physical sense in Iraq through their proxies, Kataib Hezbollah, conducting attacks on U.S. forces there in the hopes to push us out. And we see a lot of that going on around the world. So there's a lot of both overt and covert messaging taking place, as well as some activities in the physical space too.
On that note, there's new reporting that State Department cables from a couple of years ago show that there were concerns about safety at a Wuhan lab, which has renewed fresh speculation that this originated in a lab. The Pentagon has said the evidence is inconclusive on that part, but what's your inclination here?
One of the challenges that we faced is there's been discussion, was this an engineered weapon or a naturally occurring disease? I think everyone agrees now at this point that the best scientific evidence to date indicates it's a naturally occurring disease coming likely from bats and maybe through another species. But what's really interesting about this new reporting is the concerns that what might have been happening at one of these labs in Wuhan. There are two, a biosafety level lab 2 and a biosafety level 4 lab, both of whom work on bat coronaviruses, investigating and studying them, right? And so what could have happened here is simply a waste product from that lab or a bat or an animal that escaped from the lab, or that got transmitted to a human in the lab, and then that human left and the virus began spreading. What we do know for sure is that the virus originated near Wuhan. The first cases were there. We also know that some of the early cases were not out of that wet market that we've always talked about in Wuhan. So we know there were other cases in other clusters. So the indication is it came from somewhere else, potentially other than the wet market. The question is where, and might it have been these labs, these lower safety concerns? And that's a very real concern because that indicates not necessarily culpability on the part of the Chinese government, but a role the government may have played unintentionally in the virus getting out.
We don't have any evidence that this waste product theory has any water, though. We don't know, right?
Well, what's interesting about the theory is you're seeing a lot of leaks coming out of the U.S. government about the concerns raised about the lab. Just in January 2018, we saw Tom Cotton out there talking about intelligence reporting that he was hearing potentially about government sourcing on this stuff. And so what's interesting is there's an increasing drumbeat suggesting that there is some sort of connection to these labs, right? What the connection is, we're not sure. And you're right, there's no rock solid evidence, right? What we do know is it's not a bioengineered weapon.
We're also learning more about countries possibly underreporting. U.S. intelligence has said that China underreported their numbers. It could be happening in other countries as well. How bad is this really? How bad was this really in China, in Italy, in Spain?
Yeah, it's hard to know because of both the underreporting problem, but also the under surveillance problem. And what I mean by that is one of the things we've seen in the U.S. is we've seen big upticks at times when the testing has rolled out more aggressively, right? So in New York, we saw sort of a lumpiness. We know that sort of the virus likely has a pretty flat, a pretty even cyclical trend to it, right? That's at least what we've seen historically with these type of viruses. That being said, the reason why you see some of these sort of breaks is because as you get more surveillance out there, more testing, more evaluation, you're testing more people, you're getting numbers that are lumpy. And so we've seen some of that. So some of it may be unintentional underreporting, and some of it may be just the rollout of testing. And so with China, it's a really interesting situation because we know that they have made active efforts to cut down on the amount of information coming out and control the flow of information. And so we know there's ongoing effort. We don't know why that is, right? We don't know if they're trying to be deceptive, if there's some sourcing issue, or it's just, oftentimes you say don't blame it on a conspiracy when it could just be government incompetence.
But again, as we know, it seems to be a naturally occurring virus. That is the one thing that we know for sure. Now, let's talk about the disinformation campaigns. Of course, the United States is heading into a critical election. Now we know that Joe Biden is going to be the Democratic nominee. President Obama has endorsed him. I presume that gives ripe opportunity as we're battling the coronavirus for state actors and bad actors to take advantage of this as we're going into a big election. What are you seeing there in terms of the disinformation campaigns? How widespread is it? And how do we stop it?
One of the things we know for sure is that the Russians don't feel like they paid a real price for their intervention in the 2016 elections. And as a result, they're likely to continue to get involved. They're likely to try to create the kind of messaging that puts Americans at odds with one another, create dissension amongst us, create division. And they may play both sides of the game, going after voter databases, trying to make them hard to access, undermining confidence in the American body politic in our elections, in their results, and in our own government and elected leaders is something the Russians have been very effective at, and the Chinese are already trying to do with their messaging. That's what I worry about. I think what that requires is the federal and state government to work a lot more closely together, and states to work with one another to defend against a nation-state threat, because the Russians and Chinese are focused on us as a nation. States are still doing the elections on their own, one by one, not defending collectively. That's a real challenge.
Meantime, we're increasingly looking towards technology to help track this outbreak with contact tracing, Apple and Google now teaming up. Obviously, that means we can be more comprehensive and efficient when tracking the outbreak, but also potentially opens up new security vulnerabilities, privacy concerns. Are you okay with this, given that we're in a public health crisis, or do you worry about certain issues?
Well, look, we should always be skeptical of overweening government power and the government trying to step too far. We come from as a country, we come from a history where our forefathers were deeply worried about overweening governments. Right? It's why they came to this country. It's why they started the revolution. That being said, in a public health crisis, we're of course going to take certain measures to track the virus and protect people that perhaps go beyond what we normally expect. And so the key here is to ensure that we're doing things that are designed to protect public health, that we allow the government the information it needs to have access to, but also we do that in a privacy-sensitive manner.
Jamil Jaffer there of IronNet Cybersecurity. And just to recap, we've now learned that Google will be slowing hiring for the rest of the year. This coming from Alphabet CEO Sundar Pichai in a memo to Google employees. This, of course, is a company that hires thousands of people every year, so this is certainly big news. We're continuing to dive into these headlines as they roll in, and we'll bring you more information as we have it. Meantime, Airbnb has raised another $1 billion, and this is the second week in a row. We'll get the latest from Airbnb Senior Vice President for Global Policy, Chris Lehane, next. This is Bloomberg. For the second week in a row, Airbnb has lined up $1 billion in debt. This as the travel industry has slowed to a crawl, creating quite a challenge for the home sharing leader. Joining me now on the phone, we've got Chris Lehane, Airbnb Senior Vice President for Global Policy. Lots going on, Chris, for you over the last several weeks. Talk to us about this extra $1 billion here. How much of a financial cushion does this give you?
Me on, and hope you and your family are doing well, and all the folks out there are staying safe in these crazy times. But look, the way we're thinking about this is that what you have going on out there is bigger than just a market correction. It's almost a human or societal correction. And we've been using the metaphor of this is just a massive storm. And we know we're going to get to the other side of the storm, but we want to make sure that when we get through the storm and get to the other side, that we're in as strong a position as we can be. And so really over the last several weeks, we've gone out there and put together the resources to make sure that not only do we get to the other side, but we get to the other side really strong. And that means having the resources and support to be able to invest in our community as we go through this. And so between last week and this week, really put ourselves in that position, with a significant amount of capital that we can now access and use, and really use to focus on investing in our products, in our services, and most importantly, in our community.
So paint the picture for us then. Just how dark is the storm? How much has travel slowed, especially cross-country, across the United States and globally?
Well, I think anyone out there, is well aware that that we're going through, an unprecedented global crisis, and really at the front end of that has been travel and tourism. But I don't think it's just limited, obviously, to travel and tourism. It's impacting all sectors of the economy, all sectors of society. I think as we think about it, we are certainly looking in real time to look at data out there and actually make real-time adjustments and modifications. And, I'll point you to two that we've done in the last 10 days. In the last 10 days, we've launched two new products and services. We launched online experiences, a version of our in-person experiences, but which you can do over your computer or over your device, have had a lot of success with that since it's initially been launched at the end of last week. And we also introduced something called longer-term housing or longer-term stays. And this is housing for people who need something that's more than a short term. They need a permanent place where they're going to be for 2 months, 3 months, 6 months, 9 months. This is a space that we had already seen growing pre-pandemic, but it really accelerated in the weeks after the pandemic as people needed to find a different and more flexible form of permanent housing. I just point to those two. They're obviously not the answer and the be-all, but what it reflects is how we're trying to use the resources that we have to invest in our platform, invest in our community in real time to be able to support them as they go through what is a really tough time out there, not just in travel and tourism, but globally in every sector. And I do think there are some things that you can predict that are going to change. Like I do think that as you look on the other side of this, as people are able to come out of lockdowns or stay at home sheltering, that there will be travel. It will most likely be a lot more localized before you get back to cross-border travel. And how are we making sure that we're taking the steps to help support that? I think there will be other things that happen that are less predictable. Anytime you go through a massive disruption, you can have some predictable stuff and some stuff that's not quite so predictable. But the ability to have the resources and the capacity to move fast and quickly to adapt to that is really important. At the end of the day, though, we have an incredibly resilient product. We have 7+ million listings around the world, and we know people want to travel. I'll just share two, I think, relevant stats. One is that over 90% of our hosts are looking forward to hosting and continuing to host. Number two, as of the end of March, we actually had more people making bookings 6 months out than we did the year before. And then the third thing I said, promise two stats, I'll give you a third one. And that is we actually did a survey recently to just look at consumers and how they look at the different accommodation offerings out there. And over 70% of those consumers responded by saying that they actually are looking at using short-term rentals and particularly Airbnbs because they see them as the type of places where they're going to have more control over their environment, over their accommodation experience. So obviously we're going through an incredibly difficult time. No doubt about it. Everyone is. But certainly trying to look at where we're going to go and looking at some of our inherent strengths and how we build off of that.
Right. Look, those are positive signs, and we can all be optimistic. I think we all hope life goes back to normal after this. But the question is, will life ever go back to completely normal, and what is the new normal? You know, I know Airbnb is a private company. You know, you've said this is a storm. Can you give us any sense of how this will hit revenue? Like, for example, will revenue be down by 50% or more this year?
What I will say is obviously we've been impacted, perhaps not quite as much as some of the others in the travel and tourism space that are publicly traded and where I've been able to see some of that data, but we're all being impacted by this significantly. I do believe, and, as you said, like, is this a new normal that at some level presupposes that there is a normal baseline? This may just be the great next, and some of those baselines really don't apply or don't exist. But, we do know when we have seen one-off market disruptions in the past, hurricanes in the Caribbean, earthquakes in Mexico, issues in Europe, that we have seen that our platform typically comes back faster and quicker and actually even grows at an accelerated pace on the other side of that disruption. Now, we've never seen anything quite like this, obviously. But as I said earlier, we do see a lot of data signals that, suggest that whether it's a V-shape, U-shape, whenever that comes back, we are going to be well positioned. We have the resources to be in that position. And look, at one of the most inexorable principles of humans since they walked out of the old Divide Gorge is that they do embrace travel and they do love travel. And there is something inherent to being human and wanting to connect with people from different places and experience different things. So, obviously really tough times, realistic about it, doing everything we can to support our community in this time period, but do feel that, we will be well positioned on the other side of that whenever that other side gets here.
Meantime, Airbnb has been doing its part to help folks on the front lines, offering accommodations to 100,000 healthcare workers. How is that going so far? And, are you prepared to expand that or do that in other regions of the world as the outbreak continues to spread?
Yeah, this is just a classic example of having followed our hosts. So this began with us seeing hosts in some parts of Europe opening up their homes to those first responders so they could be on the front lines. And then about 2 weeks ago, we announced a program where our initial goal was to get 100,000 homes opened to be able to support those angels who are on the front lines, right? The key to the chain of life out there. And within a week, we had more than 100,000 Airbnb hosts volunteer to open up their homes. I think it's well over 130,000 as of a day or two ago. And we've launched some incredibly interesting programs with the French national government in France, in Italy. In both of those, thousands and thousands of people being housed right away. Last week, at the end of the week, was incredibly honored to see Governor Andrew Cuomo in New York announce a program where we're going to be working with the state and with a large labor union, SEIU, whose people are working in these hospitals to help provide both that frontline housing and housing for the actual medical experts. And we're going to be rolling out additional programs really in the days to come in different cities around the world who we're engaging with and working with. At the end of the day, we're obviously honored to be involved with this, but this is really being led by those Airbnb hosts who are opening up their homes. In the New York case, Brian Chesky, our CEO, co-founder, actually contributed $2 million of his own money to help support the program and provide support to make sure that it's getting off the ground and working really fast. But again, this is really being led by our hosts, and I think it take a big step back, whether it's Airbnb or whomever. I just think you see so many signals out there and signs out there where neighbors are looking after neighbors, neighborhoods after neighborhoods, communities after communities.
Right.
We're playing a really small part in this, but it's fantastic to see.
I've seen notes in my own neighborhood about folks opening their homes for doctors who have to quarantine from their families as well, and some of that's happening on Airbnb. Chris, last question. Airbnb spent aggressively last year planning for a public offering this year. Can that still happen? What are the plans now? Was it a mistake to spend that money, even though nobody could have foreseen what we'd be going through right now?
Well, obviously, none of us had the global pandemic playbook in our drawer. I think we had game planned for any number of scenarios, including, by the way, being ready if there was some type of a disruption along the lines of 2008, 2009, or even 9/11. But the global pandemic is just at a different level. All of that said, the investment that we made in 2019 was for the long haul. A significant amount of it was in the technological and tech infrastructure of the company, and that will serve us well into the future. And so ultimately, while no one could have necessarily foreseen a pandemic of this level, the decisions to invest in the infrastructure last year are certainly going to serve this company as we go forward over the long haul.
All right, Chris Lehane, Airbnb Senior Vice President for Global Policy. Chris, thanks so much for calling in. Really good to hear your perspective. Appreciate you joining us today. I do want to recap those headlines that are rolling in from Google. Google will be slowing hiring now for the rest of the year. This coming from Alphabet CEO Sundar Pichai in a memo to the staff. Again, slowing hiring for the rest of 2020. Google, of course, a big recruiter, big hire for the United States, and especially in Silicon Valley. Here's a quote coming from a Google spokesperson. "Will be slowing down the pace of hiring while maintaining momentum in a small number of strategic areas and onboarding the many people who've been hired but haven't started yet." At the end of last year, Alphabet employed about 119,000 people. So that gives you an idea just how big a company this is. And of course, it's a generally healthy company. This serious news that even a healthy company like Google will be making a move like this. Okay, coming up, we're going to be talking about telehealth. And if you have to stay home but you're feeling sick, a new way that you can be diagnosed. We'll be right back. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang. Testing. There is still not enough of it, not enough access to proper coronavirus testing. Now, one startup, TytoCare, has a partial solution with a diagnostic healthcare system that you can use remotely. Joining me now is the co-founder and CEO of TytoCare, Dedi Gilad, who's on the phone with more. Dedi, you guys just raised $50 million in funding. Not a lot of companies raising money right now, but I think it speaks to what you have to offer here. It's not an actual coronavirus test that you can do at home with your technology, but you give folks the tools at home to be diagnosed by a doctor remotely. Tell us how it works.
Thank you, Emily. Tyto really allows for the first time patients, lay users, consumers at home to really run a full medical exam, replicating the face-to-face interaction with a clinician at home. Basically, it's a medical kit, FDA cleared, that helps the user, guide them with a lot of algorithms and smart techniques to really capture the sounds of the heart, the lungs, the stomach, imaging of the throat, the ear, and other vital signs, and transfer this data either in an online session or asynchronously to a remote clinician for proper diagnosis.
So how many folks have you seen using this? I understand demand has taken off. Obviously, we've got a lot of folks around the world who might have this disease or have this disease, but also a lot of people who have other issues that they don't want to go to the doctor for right now.
Exactly. So telehealth in general and TytoCare specifically enables families and general population to really receive high-quality care from home without going out, without loading the system with more unnecessary visits, but also protects clinicians and professionals from seeing patients, from getting in touch with sick people or people under quarantine. We are specifically, Tyto started working with the COVID-19 right after the cruise ships came from Japan to Israel and to the U.S. We're now implemented in about 18 hospitals in Israel and with the 5 health systems in the U.S. To do this kind of treatment and kind of support in really monitoring those patients and also providing the general population ability to really reduce the need to go out right now for the basic primary care service.
Now, you're, as you mentioned, based in Tel Aviv. Here in the United States, anecdotally, we've seen reporting that hospital visits are down, doctor visits are down. I believe I saw a headline, "Where have all the heart attacks gone?" Because normally emergency rooms are filled with people who have, chest pain and other issues. Now, either those folks aren't having those issues or they aren't going to the hospital or the doctor about it, or perhaps, because they're in a different frame of mind, they're not working so hard, they're at home, they're not facing the things that would normally trigger those issues. That has really interesting implications for telehealth, which has not taken off perhaps as quickly as some might have thought. Do you think this is perhaps a moment that will lead to more remote doctoring in general now because people are used to the habit of this?
Yeah, that's for sure, Emily. And I would say the era of telehealth has arrived, and it didn't pick up for a while. Many years that people were doing telehealth in a lower level. I can tell you, by the way, even before the COVID-19, Tyto specifically, because we bring TytoCare, because we bring a very unique capability to really make this visit much more clinical oriented and much more fulfilling, we saw 10 times utilization than the standard industry numbers. But with the COVID-19, I think it's an inflection point for telehealth. I think this is the beginning of the on-demand era in healthcare, and things will not go back to what it used to be. Obviously, we're now experiencing a spike in demand during this pandemic, but even following that, the mindset of people will probably be changed. People will get used to see this on-demand service as something, that can really help, not as just a convenient issue, but also sometimes as a must-have a way of getting healthcare. So this will definitely change.
All right.
We will see a change following the pandemic.
Fascinating. All right, Dedi Gilad, the CEO of TytoCare, thank you so much for joining us and sharing your story with us today. Moving on, I want to talk about somebody who was diagnosed with COVID-19, Lyft Chief Strategy Officer Raj Kapoor, who came down with the disease and now wants to help people who are suffering from it and give everybody else a way to offer their own help. He's launching this week worldwithoutcovid.org. I spoke with Kapoor about his experience and what he helps to achieve with this organization.
I tested positive March 18th, and it was, I was able to trace it back, and I got tested because I was able to find out that some people that were on a trip with me that weekend were tested positive. They happened to be from New York. This was on the early end of people getting it, and there was a lot of unknowns. There remained to be a lot of unknowns, but it was a very scary time. There was a lot of fear and anxiety. It also took me from getting the test, which I did at the Google Verily San Mateo Center. It took 9 days to get the results back. So those 9 days were really full of anxiety. And I also, unfortunately, exposed my wife, Lydia, who's a physician, to the virus too. And so she tested positive a few days later.
And you're married, as you said, you've got 4 kids as well. Did they get sick? How did you handle that?
Yes, in fact, my 2 older kids also got sick. They didn't get tested, but we're pretty sure that they had it as well. The 2 younger kids, not quite sure. At 9 and 11, they seem to be jumping around fine. The good news is that everyone has recovered.
So you've launched worldwithoutcovid.org. It is now live. You've got the support of Lyft co-founder Logan Green, Julia and Kevin Hartz of Eventbrite. What is the main focus of the organization? What do you hope to achieve?
The main goal of this, worldwithoutcovid.org, is a nonprofit public health initiative, which is a registry, which takes in anyone. You could be COVID positive, COVID negative, you could be asymptomatic, but you raise your hand and say, I want to help get the cure. I want to help research clinical trials. I want to help with plasma blood donation. So what we do is put you through a screener questionnaire that is done in very consumer-esque style, Silicon Valley, and matches you with all of the COVID research that's going on. And we, I thought I'd have to create this, but I found a startup, Telehealth, that Khosla and Founders Fund funded, that already had this for all conditions. They agreed to take a subset of it and make it free so that it's free for anything related to COVID. What we have now at launch is over 400 clinical research trials, also plasma donation links. And those trials need about 270,000 volunteers. This process of getting people into trials is a broken process. 85% of clinical trials are delayed because of lack of participation from volunteers. And 65% of people that come in the funnel don't leave and don't do it because it's too complicated. So we are hopefully going to compress that time frame, which will compress the time frame for a cure.
You're also the Chief Strategy Officer of Lyft, and I know you're launching this independently of Lyft, but obviously Lyft has been a part of this story. Have to ask you about your thoughts on the gig economy, drivers, and what this really means for the company. We know that ridership has plummeted. We know that the economy is going into a recession. Uber has Uber Eats. Lyft doesn't have that. Can Lyft ride this out?
Yeah, the answer is we absolutely can ride this out. What's of utmost importance is safety of drivers and of passengers that are there. And, first and foremost is supporting the shelter in place that we have. Lyft is an essential service. We're operating. Yes, the demand is lower right now because of shelter in place, but we are doing really important rides. We're getting people to places of care. We're starting to now deliver groceries also to seniors that are in need. And you'll see more efforts around delivery of items that we work with large organizations to help them. So it's not just about moving people, it's about delivering essential goods and essential services that are needed. in doing it. But we have the wherewithal to make it through this crisis. People have predicted the death of Lyft many times before, and we come out just knocking because John and Logan really know how to run a business well and have created an incredible culture that has risen to the occasion.
That said, the market cap of Lyft is now about $9 billion, which is a third of what it once was. There's been talk of M&A. I asked Dara Khosrowshahi about this, the CEO of Uber, when I spoke with him. Would you sell to Uber if given a chance?
There is a strong need for rideshare going forward that's going to be there more than ever. A lot of people coming into this recession and out of this recession won't be able to afford a car and are not going to be using a vehicle as much if you live in a city, and the cost of parking and all those things. So we think we're going to be a great alternative when Americans start moving around.
Lyft Chief Strategy Officer Raj Kapoor there. I want to get back to that breaking news now. Alphabet CEO Sundar Pichai sending a memo to the entire company telling employees that they will be slowing down hiring through the end of the year. I want to bring in our Garrett DeVink, who covers Google for us. Garrett, tell us a little bit more about what we know and what was in this memo.
Yeah, I mean, this is pretty big news for Google, which, essentially for its entire history has just hired people all the time. They hired almost 20,000 people in 2019. And what the CEO said here to the company is that they're going to be slowing that down completely. I mean, this isn't 100% a hiring freeze. They said they'll focus on a small number of strategic areas where they might still be hiring people. But, you take in sort of typical Google euphemism, I mean, my interpretation of that is that this is a pretty significant slowdown. And I think what's going on here is, it does show just how much this is affecting the company, and Google very focused on sort of, making sure its culture stays a certain way. They're having trouble onboarding new hires. You can imagine starting work at any new company right now is very challenging. But Google in the memo itself, Sundar Pichai said they were having trouble onboarding new people. But I also think that this is something that will, Google is looking at its balance sheet right now and wants to cut down on costs. The last couple of years, the financial story really has been between growth and of revenue and growth of expenses. And Google's expenses have just continued to go up and up and up as they keep building new data centers and hiring people to sell their cloud services and to sort of, keep YouTube videos, clean and from being sort of taken over by trolls and fraudsters. And so they've spent a ton of money in the last couple of years hiring new people. And this just shows how much they're, thinking about scaling back on that.
This from Sundar Pichai in that memo. We believe now is the time to significantly slow down the pace of hiring while maintaining momentum in a small number of strategic areas. They clarify that, as you said, they're going to continue onboarding people who have already been hired but haven't started yet. We've got Google shares down slightly after hours. Garrett, put this into perspective for us, given that Google is a healthy company, a profitable company, but is looking at a huge advertising slump this year. Some analysts saying Google and Facebook together could see a $40 billion plus decline in ad revenue. How well capitalized is Google in other areas to weather that kind of slump in its ad business?
Yeah, I think Google is probably one of the best capitalized companies in the world to really deal with the kind of recession that that we're looking for, that we're going to be experiencing in the next couple of years here. The company, obviously, great credit rating, has huge piles of cash that it can draw on. But I do think it underscores, and I think people should be looking at the rest of the market and saying, if a company like Google, with all of its cash reserves, with such a profitable company pulling billions and billions of dollars every quarter, needs to really slam on the brakes in this way, what does it mean for other companies? And I think when it comes to advertising, at the financial crisis, Google and Facebook, that was really the time where they really came to the forefront of the advertising world. They were big, but not huge at that point yet. Advertising was still relatively traditional. But now we're going into this new sort of downturn with Google and Facebook making up huge swaths of the advertising market. Online advertising for the first time became bigger than traditional advertising last year, and Google and Facebook essentially occupy 90% plus of that market. And so they, although they'll be able to kind of get through it, it will really, really show in their revenue because they do control such a huge part of the ad market right now.
I want to put this in perspective, what it means for the American economy, what it means for unemployment. If we're looking at, potentially 22 million jobless claims just filed in the last 4 weeks, economists are saying we could be that a 20% unemployment rate in the United States could be more realistic as these numbers continue to rise. If Google, in a good year, hires 20,000 people, if they were to even hire half that this year, you're talking about 10,000 people who won't be getting jobs at Google that might have gotten a job at Google. I mean, put this a little bit into perspective for us, what this means for the operation of a company that has for its entire history been expanding exponentially.
Yeah, I mean, I think it's when you Google is a large company in terms of employing almost 200,000 employees and contractors. But I mean, when you compare that to sort of the corporate giants of previous decades, the manufacturing companies, consumer giants, those kinds of companies. I mean, retailers. Google has fewer employees. There are fewer employees than Amazon, which of course has to staff warehouses around the world. Whereas most of the Google employees are focusing on sort of, designing things and software and building code. But I do think, it does show that, these are also people who were very well paid and they are localized in certain areas. Google has been making an effort to spread its hiring around the United States. Especially last year, they spoke a ton about that and putting jobs in states where, maybe the unemployment was already higher than places like California and New York, where the bulk of Google's employees have historically been. So I do think that for places that we're looking forward to getting some of those, great, well-paid Google jobs, that's not going to happen anymore, and it will just sort of deepen the impact on some of those places already.
So talk to us about the other parts of Google's business outside of the advertising business and where, Garrett, you would see the company picking up the slack, or if this is really potentially bad news for Google's or Alphabet's quarterly earnings as well.
Yeah, I think that, the advertising slump will definitely hit Alphabet's quarterly earnings. There's been a ton of talk the last few weeks about Google's cloud business, of course, which is, one of the fastest growing parts of the business. Cloud and YouTube are really where all the growth is coming for Google. And cloud is something that's very important for the company. It's something that they're very good at and that they've put a ton of resources in over the last couple of years. A lot of that hiring growth and expense growth has gone towards the cloud business where they are trying to sell their software. And I think there's been a lot of, this sort of positive sense that, we're all working from home and companies aren't able to do things in person anymore. So maybe cloud software sold by companies like Google, Microsoft, and Amazon will get a boost going forward. But I do think that, that might be sort of the first reaction. And maybe there was a small bump in cloud sales across the board in the last month as companies adjusted to this new normal. But if we do have a serious recession of the one that, we're sort of talking about here, that will impact cloud growth as well. Companies going out of business don't sign new cloud contracts. Companies retrenching don't sign new cloud contracts, even if they need to work from home.
All right, Bloomberg's Garrett DeVink, thank you so much for giving us some more insight there. Again, Google slowing hiring through the rest of the year. We actually did speak with Google Cloud CEO Thomas Kurian a couple weeks ago, who was very optimistic about the new activity that they're seeing. Also, the YouTube head of product, where we're also seeing views spike, especially when it comes to news content and educational content for kids. But he demurred when we asked about advertising. Of course, we're going to continue to cover this story and bring you more developments as we have them. Meantime, there is a new iPhone on the horizon, and Mark Gurman, our very own Bloomberg Mark Gurman, is here to tell us all about it. We'll speak with him coming up. This is Bloomberg.
Infected with the coronavirus and potential.
You're looking at a live shot of the White House right now. President Trump speaking, saying the U.S., he believes that the data suggests the U.S. has passed the peak on new cases of the coronavirus. We are listening into this. We're going to bring you any headlines from this. I'm looking at my Bloomberg terminal now for those headlines as they cross. The president also saying they'll be announcing new guidelines around the coronavirus tomorrow. Meantime, though, I want to talk about Apple and a new iPhone, a new low-cost iPhone. Our very own Mark Gurman has been reporting on this. Mark, for the first time in 4 years, Apple has unveiled a new, cheaper iPhone. Tell us about it. Yes, I gotcha.
This is the new iPhone SE. This is the first time they've come out with a new low-cost or a specifically low-cost iPhone since the iPhone SE was announced in 2016. And what do you know? This one is also called the iPhone SE.
So why now, for the first time in 4 years? Is this because Apple imagines that because we are in a recession, people will want to buy a cheaper phone?
No, I wouldn't say that. This phone has been in development for over a year, 1.5, 2 years now. It was originally scheduled to be released in March of 2020, so about a month ago. So you see about a month delay here. That's likely due to the economic situation and the supply chain. The reason this phone was developed was to give sort of a low-cost alternative to these, sky-high $1,000 plus iPhone prices. And it's a good mid-tier update, between the iPhone 11 and the iPhone 12 with 5G. This also puts them in a much better position, or would have put them in a much better position to compete more strongly against the low-end Android phones sold in India and other parts of Asia.
So what does this mean for September when we typically see the new iPhones for the year? You've reported that Apple, for its newest iPhone, is working on a more iPad-like device.
Yeah, that's right. So what this means is we're getting a peek of what the fall lineup is really going to look like, what Apple's lineup is going to look like for, the better part of 2021. They'll have the iPhone SE, the new one from today at the low end. And then at the high end, you're going to see those 5G models. And what they're doing is they're retaining a lot of the design of the 11 Pro and 11 Pro Max. But what they're actually doing is they're sort of going to flatten out the edges, make them a little sharper, more reminiscent, like you said, of the iPad Pro. And what they're also going to be doing for the first time is they're going to be coming out with a phone with a 6.7-inch screen. So it's going to be the biggest iPhone ever in the fall, up from the 6.5-inch of the current model. So what you're going to see is a more expansive lineup with more prices across the board, very low cost, cheaper phones like the SE, and then very high-end phones like that new jumbo phone coming out around October.
Do you imagine that Apple will change or adjust its plans for September, given that, obviously what we're going through, you've got Apple stores still closed, several Apple stores still closed around the world?
No, Emily, right now I don't think we're going to see any major changes other than a variation on timing. The fall phones typically launch between September and November, usually in mid-September. I think this year will be sort of on the later end, perhaps early November, mid to late October. But all indications are that Apple's retail stores are set to reopen in the early part of May, so in about 2-3 weeks from now. And save for a major second wave of the coronavirus hitting many geographical regions across the world, I think all things are going to be a go. But given the current health situation, obviously there's a huge asterisk on this. We don't know if there's going to be another wave. That's something, medical professionals are obviously looking at. But save for that, I think everything is going to go ahead as planned.
All right, Bloomberg's Mark Gurman, thank you so much for that update. Meantime, we've been listening in to the president speaking at the Rose Garden. The president saying that the data suggests that the U.S. has passed the peak in terms of new cases of the coronavirus in this country. They're continuing to discuss new guidelines. We don't know what kind of guidelines specifically he means, but potentially guidelines for reopening the country, reopening the economy. The president saying the U.S. has completed more than 3.3 million coronavirus tests, has distributed 100 million masks, and they've got 500 million more masks on order. You can continue watching this briefing at LiveGo on the Bloomberg terminal. All the news, all the headlines will be there for you. Thanks so much for listening. This is Bloomberg.